Hello traders, Gary Wagner here. Approximately 1:45 in Honolulu, 6:45 in New York. It is Thursday, 4th day of February 2021, and this is the daily report for gold and silver. A dramatic decline in gold pricing today, taking it approximately 2% lower and really beating out what we saw on Tuesday when gold declined by $25. It seems as though there is an imminent possibility that we will see the purest form of a death cross, and that is when the 50-day moving average crosses below the long-term 200-day moving average occur. They're pretty much right on top of each other now, and that would definitely call for a change in strategy. We'll talk about that on tomorrow's show, but let's take a look at today's activity. This continues to be a disappointing week for the precious metals bulls, with gold selling off sharply on Tuesday to the tune of about $25. And that, of course, is followed by today's dramatic $41 decline and break below $1,800 per ounce. We have April futures currently bid at $17.94 and 10 cents. That's a net drawdown of 2.23%. Spot gold is at $17.93.70. And unfortunately, we were stopped out of our Spider Gold Trust trade when the market gapped down on the open at 168.40, and that is effectively where we are stopped out. This first chart that we are looking at is a daily chart of April gold futures, and we can see that over this week, we've seen the market decline substantially, and on a technical basis, there are a couple of alarming features. When we look at the 50 and 100-day moving average, they're pretty much right on top of each other. A cross of the 50-day below the 200 is the purest form of a death cross. Of course, this began on Tuesday when market forces took gold pricing about $25 lower. That's this pretty big red candle here. We had equal lows yesterday and the day before, meaning Tuesday and Wednesday. And then today we had a hard break to the downside, resulting in a $40 decline on the day. We are looking at a close-up of the chart that we have been using. We can clearly see how close we are to getting that death cross with the 50-day pretty much on top of the 200-day moving average. We've seen a fractional recovery, 17.9520. That's our current print as the market opens and trades in Australia. If in fact we see a continued decline, which on a technical basis does seem likely at this point, where would we look for this market to go or possibly test? And for that, we'll go back to our Fibonacci retracement. We clearly broke through 1846. That was the 38.2% retracement. You have a 50% retracement that comes in at 1771. With a deep decline, you could see the market actually break below 17, although I think that's unlikely. It is possible and still within the alignment of an acceptable retracement at 1695.70. We are flat futures and will remain flat until we have some sort of technical indication that the market has bottomed and the fundamentals have shifted enough to put us back in rally mode. Silver also traded lower today. Silver futures, basis the most active March contract, closed down 49 cents. Is currently fixed at $26.39.5, down 1.84%. That is less of a drawdown on a percentage basis than we saw in gold, and that is quite unusual. The Silver Trust did sustain a drawdown today of approximately 45 cents and is currently bid at $24.48. We are looking at a daily candlestick chart of silver futures. This basis the most active March contract. We can identify a golden cross between the 50 and 100 day. This occurred approximately on the 18th of last month. That took market pricing back up to over $30 per ounce briefly on an intraday basis. And from there, we've seen this dramatic decline, this large red candle right here representing a 10% decline, today an additional 2% decline. So where could we see this market go? Well, I'm much more bullish on silver than I am on gold because of the industrial component. And the next challenge will be if it can hold $25.75. The 23% Fibonacci retracement. A break below that could take pricing as low as $23 per ounce, with absolute support right here at $22 based upon this low here, and to some degree, this low here. Obviously, the bullish Harami pattern we identified yesterday definitely did not have a confirming candle. Rather, it had the exact opposite, which is a continued decline, challenging the retracement of 23%. We are, however, still long SLV. That ETF gave up 45 cents per share today, currently fixed at $24.48. That's a decline of 1.81%. Of course, we first entered at $22.95. We still have profits there. We put on our second leg at $24.60, so just right around current pricing. Maintain your current long SLVs, remain flat in all futures trades. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.